Well, here are a few factors why you should be investing in the US stocks in 2026. One on the other, you should to understand why you should avoid investing in the US stocks in 2026. Factor number one, well, the high valuation that's taking place in the US stock market, especially being in one place. That means, let's say, a few companies are holding over 500 billion US dollars that are playing around. We should try to understand a few companies, let's say the OpenAI and Nvidia, whatever. The tech companies especially, we should try to understand. These are companies that are holding over 500 billion US dollars. 500 billion US dollars. As I speak of right now, we should try to understand that such amount of money indicates that if it wasn't for such big companies holding such sum of numbers, well, the US stock market also, let's say the SP 500, it could be, let's say, in a recession or in one or the other. However, also the returns on such companies are still low and highly unpredictable. We also should try to understand that such numbers indicate that a big sum of money is being spent on AI, and the productivity on AI or the return when its profits are likely to be coming in. The indicator that should be showing returns on AI returns is kind of low. It's kind of slow. It's kind of nowhere to be guaranteed. We should also try to understand that we should also be having what they call the softening economy. Well, unemployment rising as the labor market is slowing one or the other. We should also try to understand that such factors indicate that 70% of the GDP runs because the labor market runs almost 70% of the US economy. That indicates that there's a slow productivity. I'm not stopping you from investing from US stocks, but invest with an open eye. Otherwise, you should try to understand that things don't look at the better price, but there's no right time for investing. Otherwise, invest when you feel like it's right, and invest when you're having fun that you're ready to lose one or the other. Because don't expect always to have the green flags, or is actually expecting more of the red flags. Otherwise, just be open-minded when investing. A few economists believe that the US market is likely to be, let's say, the stock market itself likely to be either a flat or to have a negative in 2026 other than 2025 due to the high valuation and due to the scary overvaluation of the AI tech company. That means expectation growth is kind of low because the market is highly overvalued as today. As I speak of right now, it's overvalued by almost 220 or 230%. That's a highly overvalued market. If you're buying right now, have a conscious mind and think when you're buying in the first place. Otherwise, thank you for watching. See you in the next one.